Hi everybody, this is Lance from ThetaTraders.com here. Got a new office, as you can see in the background. Nice studio, laptops. Even though my hand's a little weird right now, I'm able to get a lot more successful research and more of that design quality that I'm looking for. It's a pretend backdrop, not real. All right, this video I wanted to go over the longer dated and bigger width 112 trade. I saw this in Facebook and it's a really interesting trade. It actually ties into a lot of what my methodologies are and how I think it's a safer trade in general, especially for quicker market downturns. I'm going to show you how to enter this trade in on Thinkorswim and some of the pros and some of the cons to the trade. Let's do the classic share screen. All right, so the trade consists of going really far out, pretty much the latest expiration date for MES. We want to go around 180 DTE. You can do this on ES as well. I'll show both. We'll just check on MES for now. So 167 DTE is the latest we have currently. And what we're going to do is go around 0.25 delta on the put debit spread. We're going to buy around a 4950 put. Currently on May the 4th, be with us, is 5161. So 4950 is the 0.25 delta. And normally I'll go 50 width, but in this case, we're going to go a 300 width. And you can also fiddle around with different widths as well. But we're going to go to 48, 47, 46, 50. Control click the ask. There's a 300 width put debit spread. If you look at the analyze tab for just this trade, you're going to see pretty large gains here. Let's see if this makes sense. Should curve out. And the back should be around 1300 or so. Let's double check here. I have the other trades on, so let's check. What's this one? There we go. So it's an initial debit. That's why this green line is below the current zero value. And you're going to have to pay the cost of the debit to take this trade on, about 4150. So 4150 times 5, looking at about 500, $200 or so. However, it's a 300 with spread, so you can make 300 times 50. In this case, it's 1250 or so. So you can make a really large profit. This is just off an MES contract. You do this on ES, you can add a zero to that. We're looking $10,000, $12,000 on this if your net gain. But we want to find a way to pay for this though. So the way to pay for it is to sell naked puts. We could sell one or two. If you want to sell one, it'll be a little bit safer, less notional value. I typically want to sell two though. So I'm going to sell two close to the 20 or so premium. Usually ends up being 0.05, 0.07 delta. Just to mimic it, I'll do the 4150. Control click the bid. And then we're going to be selling two of these. Back to the Analyze tab. Let's get rid of everything. Yep. And I'm just going to right click Analyze. And here's what we get. So I am doing this video on a Saturday, so the prices are not exact, but you could enter these in at a slight profit, typically $50 to $100 on MES as the initial credit. Right here, we're looking at around $20 or so, but obviously the pricing's a little bit off. It's a Saturday. You have a really wide, it's a 300 with put debit spread, really wide slope here, and then a very large max credit all the way up to the 4150, so strike price. So market's at 52.73 and change. If we're going to be going all the way down to 40 to 4150 or so, you're looking at 1,000 point drop, and you can actually hit your max profit here. Also have much narrower slope here, break evens at 4,000 in this case, so you get even more protection with that 300 with spread. Now, we're not going to just keep this trade on and leave it like this the whole time. What's good about this trade is we have a lot of DTE on it, 167 days. So what we're going to look at is at around 100, 20 or so days, so about 40 days from now, we're going to change to 300 width. What we're going to do is we're going to roll up, excuse me, roll up the sold put. And you can look at different amounts to roll it at. Typically like to look at rolling it up 150 points or so. So if you have 300 width and you roll the short put up 150, here at 46.50, you can roll up to the 4800. You would then have a 49.50, 4800 put debit spread. You'd still have a 150 width debit spread. What's good about this is you will take in a credit because we're rolling up. And the amount of credit you get will depend on where the market is. If the market has a decent but not huge initial drop, that roll will pay pretty well. If the market stays where it is, the roll will pay not too much because we're closer in time and you're still far away from those strikes. But it will take in more credit. And you don't want to just think of this initial credit as the main credit you'll get. It's a very flexible trade there. What I also like about that is if you wait about 60 or so days when you're at 120 DTE, you're already a little bit closer to expiration. And the main point is the initial drops that you might get when you do a 1-2 trade could really hurt because those naked puts are going to take a while to decay. But as you roll it up and as you see the purple line, as I go further out in time, the break even gets lower and lower, and the negatives move up. What we're going to do is try to take advantage of that by keeping a very large 300 width spread for a while at 120 DTE, making a 150 width spread. And then typically when we're around 60 days out, we're going to roll this short put again to around 50 width put debit spread. So we'd roll this up from the 4,800 to 4,900. So roll up another 100 points. And then you have a 50 width put debit spread, taking in more premium as well. So again, the glide path, looking at this purple line, is the main reason why I like this trade, is it takes a while before we get to this lower break even and where the purple connects to the green here. Because of that, you want to keep a large put debit spread for a while, lower it when it's advantageous, when there's a little bit less risk. Here, there's even less risk. We're at middle of September, pretty close to 60 days out. See how the purple line has a much bigger profit target? And here we can roll put debit spread again. I want to take advantage of these trades. When volatility increases, you see the VIX increase one day, the premiums will be elevated. So it could be a good time to enter those trades in because the VIX mean reverts and then drops down in most cases. Also, if you want to campaign these in, I recommend that. At datatraders.com, I'm going to be doing this on MES every month. And 180 days out, 30 days from now, 150. I'll sell another one close to 180 and just keep staggering those in. So you have a nice glide path as the market drops. You wouldn't necessarily get hurt as much. So if you're interested in these trades and talking to other like-minded individuals, one-on-one help from me, you can join at datatraders.com. There's a link in the description down below. Appreciate you guys watching this video. Have a good rest of the weekend and be trading.